Good morning and welcome to the BioSyent Inc. First Quarter 2015 Results Presentation. My name is Rene Gorham. I'm the Chairman and the CEO of BioSyent. I want to start with a summary of our sales performance top line in the first quarter. So I've got the first chart showing you March 31, 3 months ending March 31st, going back to 2011. You can see the steady progression over that period of time, and in fact over the last 4 years our compound annual growth rate in the first quarter was 62%. In the 3 months ending March 31st of 2015, so this year's first quarter, we reached a little over $3.3 million, which was a 35% increase from $2.448 million in 2014. The growth drivers for our business can be summarized as FeraMAX 150 in Canada. So our unit sales for FeraMAX were up 30% versus the first quarter of 2014. This represented record volume in the Canadian market for FeraMAX. FeraMAX powder also grew strongly. Our unit sales were up 122% versus the first quarter of 2014. Obviously, the base of business for powder is smaller than it is for FeraMAX 150. However, strong performance for FeraMAX powder. And in fact, it's on track to meet our internal target, which is profitability within 8 quarters of launch. So we launched that product in 2013, mid-year, and we're now, I guess, we're into the 8th quarter, and we're on track to be profitable within the quarter for FeraMAX powder. And then finally, for Q1 growth drivers was our Cathogel business. Units were up 107% versus Q1 of 2014. That product is now used in over 182 hospitals across Canada. So during the quarter, we had a lot going on. We launched the Agaton system for pre-filled syringes. First compound in that system was Atropine. We launched that product in February. And I have another slide following this just to refresh you on the product itself. We secured a new contract to supply up to 40 hospitals during the first quarter. That's when we were notified that we'd had that contract win. We also set up a whole new hospital business unit with dedicated staff to support our hospital products, those being the Agaton system, Cathogel, and Proctus M. And I will speak in a couple of minutes a little bit more about our go-to-market structure in the pharmaceutical business. During the quarter, our lease was renewed in our current premises, supporting a growing team of people that are working mostly in commercial activities, sales management, marketing, supply chain, and finance. We've taken on more space, and the lease commenced in February to accommodate this growth. We've also put in place forward covers to mitigate loss from Canadian dollar currency moves. So as most of you know, the Canadian dollar has been declining in value versus US dollar. Well, since last year, mid-year last year, that went sharply towards the end of last year and into first quarter. So starting mid-year last year, we started covering forward going into the future, and that continued in the first quarter of this year. And in fact, we've covered all negative moves from Canadian dollar currency moves through the end of 2015, and I think we're already starting to work on the first quarter of 2016. On the international side, we executed a term sheet for our 9th international FeraMAX market. And we shipped orders for 2 new international markets for both FeraMAX 150 and FeraMAX powder. Those 2 shipments for FeraMAX powder represented our first shipments of FeraMAX powder outside of Canada. So I wanted to come back to Agaton system, Atropine. So in February, we launched the new Agaton system pre-filled syringe. This is a patented system for pre-filling syringes. It's an innovative product with a very much a safety and efficiency focus for the hospital. It generally takes older compounds that are used in critical care. These would be life-saving medicines that are needed when they're needed in a hurry, and delivers them in a more efficient way for the hospital, safer for both the patient and the caregiver, and importantly, reduces waste for the hospitals as well. So this was an award-winning product in Europe. It's a needle-free, glass-free, sterile plastic syringe with dual tamper-evident seal. It's been in Europe since 2009. I've already talked about the improved safety profile and improved waste. Importantly, this is reduction in waste. Importantly, this is a platform technology. So the atropine compound in prefilled syringe, which we launched in February, is the first of 3 products which we have been licensed from our partner. Our partner is developing more compounds in this technology, and we are at present negotiating on the 4th product in that series. So our go-to-market business structure, I made reference to that a couple of minutes ago. So I think it's important to understand how we're going to market now with pharmaceutical products. You've heard me over the last several quarters talk about how our business is evolving, how we've added international customers, particularly for Ferromax and Ferromax powder. And also, over time, we've been talking about adding hospital products and what we're doing there. So I thought it would be useful just to explain how we do that. So we've created in our pharma business 3 commercial units, and we label them as community health, hospital products, and international business. So we have experienced, capable leadership in each of those business units. We've got people that wake up every day thinking about how they're going to grow the business and better serve their customers for each of those product areas or markets. So in the community health team, that is Ferromax 150, Ferromax powder, and Repagyne. For the hospital business team, that's Cathogel, the Agaton system, and Proctis M. And for the international business, it's Ferromax 150 and Ferromax powder. This structure allows us to stay very focused on priorities and make sure that we don't have issues or needs, customer needs that have slipped through the cracks. It also sets us up well to keep our sales organization focused on a small number of priorities, and allows us then to add further products either into these business units or to add additional business units as we add additional products that might be in new therapeutic areas that wouldn't be complementary to our 3 existing business units. So subsequent to the first quarter end, there were a number of activities. I'll just kind of highlight a couple of them. We recruited 5 new sales reps. Those would have been people both for the community team and the hospital team in the Canadian market. We've secured a new supply contract for the Agaton system to supply up to 34 hospital locations. Now that gives us access to 74 hospitals to date. Not bad for a product that was just launched 3 months ago. We received a new marketing authorization for Ferromax powder. The first order for that marketing authorization is shipping in this second quarter, so by the end of June. And that brings us for Ferromax to a total of 3 international markets that we are now active. That is, we have partners with trained sales organizations or sales representatives on the ground calling on doctors and pharmacies and promoting Ferromax and Ferromax powder. So I want to just talk a little bit about how our pharmaceutical business has evolved now. We've got a slide that the format you'd be familiar with if you've watched any of these previous presentations. This is now showing you the last 20 quarters of our pharmaceutical business, and just gives you a sense of how the business has evolved. A couple of comments here. I guess the first is Q1 2015 versus Q1 2014. It was up 38%. The year ago comparison is important in this regard, in that we traditionally find that the first quarter of the year is normally the smallest in terms of volume and or unit volume and revenue. Certainly when you've got growing brands, that would be the case. The other thing, as we've introduced customers in international markets, is that we found that the natural curve of sales progressing quarter over quarter has changed. That dynamic has changed a little. And what we're finding is customers in international markets aren't necessarily ordering every quarter. And so that business has gotten a little bit lumpy, or that certainly the international business is a little lumpy. And as a result, when we add that to our Canadian business, you'll see that the total pharma business doesn't necessarily go up every quarter over quarter. Now, in this case, what I'm showing you on this slide shows you Q1 up over Q4 of 14, and in fact was a record quarter for pharmaceutical shipments at 3.229 million. But you see in a call-out box that we have in this graphic that the domestic business reached 3.11 million, which was 4% ahead of Q4 Canadian. That's domestic, we call it, Canadian pharma business. In Q4 2014, we had no sales to international markets, and in Q1 2015, we had sales of 115,000. So small in the grand scheme of things, but importantly, that was all to 2 new customers. And our larger market, which ordered in Q1 last year, has presented us with 3 orders, of which we're hoping to ship 2 in the second quarter of this year. So once again, speaks a little bit to the lumpiness of the business, but certainly international sales are progressing well, and overall the Canadian pharma business continues to grow. So I want to talk about a new measure that we're using to communicate our business performance. It's one that's commonly used in specialty pharmaceutical companies, and we thought we'd give a tip of the cap to those that keep asking us about our EBITDA. So this is a non-IFRS measure, but it's earnings before interest, tax, depreciation, and amortization. And in this chart on page 11, you can see that in the quarter ended March 31st, 2015, our EBITDA reached $1.31 million. That was a 92% increase from the year ago quarter, 2014, and you can see the solid progression over the last 4 years in that aspect of our business. So how does this then all translate to net income after tax? So on slide 12, you can see that our business delivered $963,000 in net income after tax. That represented an 88% increase versus 2014 first quarter. When you're looking at this chart, one thing to point out is that in Q1 of 2011 and Q1 of 2012, we were not paying any tax, so there would have been no tax expense during that period. So you're not quite comparing apples to apples all the way through, but certainly Q1 2013, 14, and 15 are. We have full tax expense in the first quarters of all of those years. So the balance sheet snapshot, once again, this is not a balance sheet per se, but some of the key indicators on it. I have been talking in past quarters about our growing cash position. You'll see here on slide 13 that on March 31st, 2015, our cash position was slightly more than $6.7 million. That was down from just a shade under $8 million on December 31st. So I'd like to point your attention to the call-out box, the top call-out box on that slide. So this change in cash position wasn't related to business performance, because of course I've shown you on some previous slides how we delivered rapidly escalating profitability. This really relates to payments in the first quarter of accrued tax liabilities, payment of accrued bonus that related to 2014, and we've invested in trade receivables, which is an accountant's way of saying we had a sharp increase in sales and therefore our receivables went up. Down below, just to point out to you again that we have no long or short-term debt. We have an operating line of credit available from the Royal Bank of Canada. We as yet have never used any of that facility. Our total equity position has grown to $9.19 million on March 31st, 2015. And you can see just in a 15-month period of time how that's grown from $4.85 million. Just one other thing to point out, just as you've seen this change in cash position, what's happening to the working capital in the business? Well, in fact, in the 3 months ending March 31st of 2015 versus the December 31 year-end number, our working capital increased 13%. So I've got a slide that I've been referring to quite often on operating expenses. This one needs a little bit of discussion. So you see that we have for several years been very strong and diligent in managing our spends and our investments on the business related to sales growth. So even though we had revenue growth of 35% in the first quarter, our SG&A went up by 5%. In essence, all of our OPEX was up 5%. So it's a little bit of an outlier. I just wanted to caution you on that. I don't want those that are watching this presentation to think that we expect to be able to grow the top line at that rate and only increase our operating expense by 5%. But we were able to, and we actually did that in the first quarter. We expect spends to ramp somewhat as we come into the second quarter. We've got some marketing programs and investment behind our growing brands and our launch brands that we expect the OPEX number growth versus previous year to come more in the range of 15 to 20% in the first half of the year. Certainly we expect our sales to continue to increase as well. So on earnings per share, we delivered 7 cents per share diluted in the first quarter of this year. So a couple things to point out. That versus a year ago quarter was a 67% increase. So that's 7 cents versus 4 cents fully diluted this year versus last. And if you just take a trailing 12-month calculation, so Q2 of 2014 through Q1 of 15, that's 25 cents fully diluted EPS. And that's up solidly as well versus the 15 cents of the trailing 12-month period a year ago. So sorry, that calculation is up 67%, and our EPS for just quarter over quarter is up 75%. I misspoke myself a moment ago. So 25 cents EPS trailing 12 months, 7 cents Q1 2015, both obviously trending in the right direction. This next slide on average return on equity is something investors have a great deal of interest in, and that is really management's ability to deploy capital and invest it in growing returns in the business. I've heard it said that companies that can deliver over 20% return on equity are doing a good job, and those that can do over 30 are doing an outstanding or an excellent job. So a statement of just information of kind of what it looks like for us over the last 5 years. You can see we were really emerging as a profitable company in 2010, and so you see a modest return on equity in that year, and then you see a sharp jump. And we've been in the 46 to 48%, 46 to 50% range 3 of the last 4 years, with the one exception being 2012, which showed a 77% average return on equity. This is a slide that pertains to the 12 months ending December 31st. It's a rather difficult calculation that we will unlikely that we will be doing on a quarterly basis, but I thought I'd show you the recap of what that number looked like for the period ending December 31st, as we hadn't presented it in the last quarterly presentation. So the last slide, just a recap of our product life cycle. You've seen this slide before. This shows you along the top in the green band with the arrow, shows you the phases that we look at products. We have products that are in 3 phases, either regulatory, launch, or growth phase. In the second green bar going left to right, you see the products that we have in each of those phases. So we consider a product to be a growth product if we expect it to grow 20% or more in a given fiscal year. And we would classify Ferromax 150 as a growth product, as would we classify Cathogel Jelly 2%. So those are 2 growth products. We have 4 launch products, those being Aguettant System Prefilled Syringe, the Proctis M, Repagyne, and Ferromax Powder. That would be products that are in the first 8 quarters of launch. You'll recall my reference earlier on Ferromax Powder coming to profitability. That also means after the end of this quarter, we'll be considering Ferromax to be out of the launch phase and into growth phase. And you can see with the greater than 100% growth versus a year ago, it certainly is in growth phase now. And then finally, in the regulatory phase, we have 2 additional Aguettant products. We have not named the compounds. These are in with Health Canada, going through the Health Canada filing and or approval process. That brings us to a total of 6 products in the market and 2 products in with Health Canada. That brings me to the end of the presentation. If you would like some additional information or want some more resources to do some research, on my last slide, I've got some websites. We have product websites, obviously our corporate website, and TMX Money, which has financial information on BioSign. So I'd like to finish off by thanking you once again for your interest in our company. We look forward to reporting over the coming quarters our continued progress.